please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now, Federal Bank is going to be in focus. It reported its highest quarterly slippages in the past quarter. The asset quality of the bank is well deteriorated. Abhishek joins us early this morning to give us his analysis of that. Hi Abhishek, good morning.
Good morning, Nigel. So if you look at the slippages at 872 crore, it's the highest quarterly slippage for Federal Bank. The annualized slippage ratio is now at 3.8% versus 1.9% in the previous quarter. So that led to, overall decline in top line, that is NII, and that impacted the net interest margin. The net interest margin, which always hovered around 3.28 to 3.33%, is now at 9-quarter low of 3.11%. You look at the seesaw in growth in NII and versus the slippages. So whenever slippages have increased, the NII growth has declined, and whenever slippages have come down, the NII growth has increased over the last 4 to 5 quarters. And due to the stress in the balance sheet, the net profit is at 8-quarter low of 145 crores. Q4 FY16 was the time when they reported a net profit of just around 10 to 11 crores, and this at 145 crore is the lowest in 8 quarters. So asset quality deteriorates in absolute value. Gross NPA has increased by more than 29%. In percentage wise, now the gross NPA stands at 3% versus 2.52% sequentially. On the positive side, deposit growth at 16% sequentially is positive. Low cost deposit share has increased to 33.3%, and advances have grown by 25%. Overall, the earnings are below estimate. Net interest income at 933 crore versus our poll of 979 crore. While net profit came in at 145 crore versus our poll of 284 crore. Back to you.
Okay. All right, Abhishek, thanks very much for that. So Federal Bank will definitely be on our radar today, but the other one will be GSPL, which reported numbers post-markets. Nigel?
Well, those numbers, adjusted for the extraordinary, the numbers were quite good. Remember, the stock has had a bit of a rally, but I'll say these numbers are good. Top line, there was a growth of around 35-36%. The margins were more or less steady, and they reported a net loss this time around. Remember, but the net loss was because of a couple of factors. One was there was a big exceptional of around 430 crores odd, and bulk of that was included provisioning on royalty on iron ore. So stripped of that, they would have reported a net profit after nearly around 13 quarters of consecutive losses. The domestic business looked very, very good. The volumes were up, that we already had with us, 1.18 million tons. But the EBITDA per ton, I like that number very, very much. 12,800 rupees on a per ton basis looked very, very good. And it's a little higher than what the highest estimate on the street expected. So 12,800 rupees compared with around 10,000 rupees on a year-on-year basis, even on a sequential basis, compared with the number of less than 10,000 rupees odd. Even if you take a look at the Oman business, well, that looked very good. It delivered an EBITDA of $70 million plus, and that number really is the best that they've ever delivered in Oman. Even if you take a look at the power business, that was a bit of a drag. The EBITDA number did come in lower. It was down by nearly around 30% approximately. Lack of coal availability, lack of PPA signings, that's something that hurt them. But going ahead, what are the key triggers? We'll have to keep an eye out because the domestic business, that'll need to stabilize at around that 10 to around 12,000 rupees on a per ton basis. That's a EBITDA per ton that we're talking about. You'll also have to keep an eye out on the Oman business. Can they do 280 to around $300 million for FY19? Going to be rather important. And also the debt number was just flashing for you on the screen. It's come in at around 42,000 crores approximately. It's reduced from around 46,000 crores. So can they reduce that debt further? Well, yesterday at the presser, the management said that they're expecting that debt number to be reduced by another 4,000 to around 5,000 crores. If that happens, then that could call for another re-rating of the stock. Remember, they're also talking about listing their Oman business. So lots expected in FY19. Let's see whether they deliver or not. But I'll expect the stock to open up in the green purely because these numbers, if you strip that extraordinary out of it, it looked quite good.
Okay, all right. So that's on GSPL. Thanks, Nigel, for that. But moving on, the Fed has time to wait while hiking rates, says the former Vice Chair Stanley Fischer in an exclusive with CNBC. He adds that the trade war situation could get ugly.
We need the Fed to do its part well, and I'm pretty sure that will happen. But we also need the people in charge of the political relations between countries to think about how the other side will react and try to minimize the feedback that you get from the measures you want to take.
How do you evaluate the alliances where they stand right now, both on a trade alliance side as well as a geopolitical alliance side? Are they fracturing at all, given what we're seeing with Iran, given what we're seeing with the potential for a trade war? And how does that impact, the ability for the economy to continue to grow?
Well, the alliances aren't yet collapsing. On the other hand, when the largest and most important player in a particular alliance kind of checks out for a while, that's a very serious move, and it could produce further further loss of coherence of the alliance.
And particularly China. I think a lot of people are focused on, already tensions there with regard to the potential for a trade war. Does something like we're seeing in Iran pulling out of that deal impede those relations even more?
Well, that's likely to impede progress with North Korea. It may be a little less with China. The Chinese are playing this very carefully at the moment, and they haven't thrown their weight around yet, but they have a substantial weight, and depending how we handle our side and how they handle their side, we could get a fairly ugly situation at some point. I don't think it's the most likely outcome, but it's a possibility.
Okay, then time to slip in a short break. You come back, we'll tell you all the cues coming in from the derivatives market. Stay with us.
Well, let's get talking about commodity and currencies. We have Manisha Gupta joining in with an update from that space. Well, Manisha, no prizes for guessing. I think crude continues to be top of mind.
Oh, absolutely, it does, and it is 3% up overnight. It has gained more than 5% since the U.S. move on Iran. So we are making higher highs when it comes to the crude oil prices. The important point to note is that the U.S. dollar also is up 3.5% in the past month, and you have the crude oil prices gaining 12% in the past month as well. That's a rarity because as and when the U.S. dollar gains, you see the dollar-denominated commodities do not do so well. But this chart really seems to be moving in tandem. Also supporting the crude oil prices is the U.S. weekly inventories, which has seen a decline by 2.2 million barrels. The gasoline inventories also have declined. So the markets nearly are looking at the spare capacity now, which only lies with Saudi Arabia, Kuwait, Russia, and U.S. So if the Iran sanctions do come in, as they would, and you will see supplies decline from there, these countries are perhaps the producers which will come in to fill that gap. In the meanwhile, almost everybody that we have been talking on air and the reports that have been coming in have been revising their crude output targets on the higher side. Goldman Sachs came out with a report last night saying that $82.50 is what they see by this quarter itself coming into the market. So it is bullish when it comes to this sector there. A quick word on the metal space, where we have seen the metal prices actually decline today. So you have the steel prices trading at a 2-week lows. Iron ore prices have declined. There is some pressure coming in for copper and zinc as well. And this is on the back of strong U.S. dollar that you have seen.
Okay, all right. Thanks so much for that, Manisha. Well, getting back to earnings then, Zee Entertainment, they're going to be reporting their numbers as well. Sonal joins in to run us through the expectations. Hey, Sonal, good morning.
Hi, good morning, Nigel. With Zee Entertainment, one thing that we need to take care of is in last year, they had sold one of their sports business. They had made 2 acquisitions. So on reported basis, there'll be a lot of one-offs. But in terms of revenue, we're expecting a growth of around 11%. EBITDA is expected to be flat with a growth of only around 1%. But there'll be some pressures on the operating profit margins. And that is because this quarter, they've launched their OTT app called ZEE5. And profits, they are expected to go down by around 83% because last year they had sold off their Zee sports business, because of which they had one component of other income. But on adjusted basis also, we are expecting the profits to go down by around 14%. But key things to watch will be the subscription revenue growth and the ad revenue growth. On the whole, in the TV industry, we saw a growth of around 13 to 14% this quarter. And specifically for Zee, on adjusted basis, we are expecting ad revenue growth of around 20 to 21% and subscription revenue growth of around 16 to 17%. But if we talk about reported basis, ad revenue is expected to grow on the similar lines around 22 to 23%, but subscription growth, that is where we'll see some sort of decline, and it is expected to decline by around 3 to 4%. Apart from subscription growth and ad revenue growth, we'll also look at the operating costs that are expected to grow around 6% because now new content has come in, and that will lead to some increment in the cost. There will be increase in programming hours as well, and that will also put some pressure on the margins. There is strong outperformance will be seen in Zee Network because of market shares that they saw in this quarter, and international subscription that is expected to decline by 4% because they are seeing some demand pressure in the South Asian countries. Overall, the main factor to be numbers that we have to look out for will be the ad revenue and the subscription revenue growth. Let's see how the stock performs through the day.
Okay, all right, Sonal, thanks very much for that. So that's on Zee, but we have Nestle, which is releasing numbers today as well. Mangalam, what can we expect?
Well, a good quarter expected. That's what the price is telling you, Ekta. Most of these FMCG companies, Nestle included, record high ahead of numbers. And mind you, doesn't trade cheap. 49 times FY20 earnings. So one of the most premium valuations in the sector belongs to Nestle. So in light of that, we're expecting a 14% revenue growth. The margins are likely to grow much higher because the EBITDA out there, we're expecting a 29% growth. The number you're watching out for on the EBITDA is 655 crores. And the net profit as a result of expansion in the top line and margins is likely to grow by 32%. The number we're working with is close to around 400 to 405 crore rupees. What will work for Nestle? Well, they are expecting, the street is expecting a high single to low double-digit volume growth. This is something that the company will tell us in the press release. Along with that, the margins, they are likely to expand primarily because we're seeing deflation or flat moves as far as the input costs are concerned. So the prices of wheat, milk powder, the likes of sugar, coffee and palm oil are down anywhere between 5 to 20%. That will support their margins. And now for Nestle, Maggi-led recovery woes are over. We're focusing on new products because the company has launched about 45 new products over the last 24 months. So the contribution and performance of those new products are something we'll be watching out for. We've been seeing ads of the chocolates as well as the beverage portfolio of Nestle on our TV channels as well. So ad expenses may perhaps be slightly higher. More importantly, watch out for gross margins and sequential recovery in sales. We're likely to see sales of close to around 28-24 crores, which is the highest that we've seen in at least the last 7-8 quarters. So those are numbers that we'll be watching out for.
All right, Mangalam, since you're with us, tell us what about the derivatives market? How is things shaping up there?
Well, the derivatives market, Nigel, looks good because yesterday, while we recovered from the lows after trading flattish for most part of the day, the Nifty May futures premium, the number that we keep watching out for every day during the markets are on, that one increased from 17 points to 26 points. Remember, it corrected from 41 points down to 17 points is when we saw that bit of consolidation. FIIs later confirmed that there was buying at the higher levels, so 217 crore worth net buy figure coming in index futures, and there was more action in the Nifty Bank. 3.5% open interest added on the Nifty Bank as against 1% on the Nifty, and that is understandable given it's the Nifty Bank weekly options expiry. On the Nifty front, it'll be important to see what happens given we saw incremental writing on the 10,700 put, 10,850 call saw some addition, and the 11,000 call writers, they chose to cover some positions as the premium moved a little higher. For Nifty Bank, however, support is closer to the levels where we are at, and the headroom is all the way up to 26,400 call, which was most active. We saw some writing at the 25,900, 26,000 and 26,100 puts, so that should be a bit of a support zone. Most importantly, in terms of stocks, I'll be watching out for PC Jewelers because remember, today is the board meeting for the buyback and the stock has entered the F&O ban, so keep an eye out on that one. Fresh longs were added on Arvind, good set of numbers that came by. Tata Motors DVR saw some short covering which propelled the stock price higher, and some shorts added on both Chola Finance as well as NCC. So keep an eye out on all those stocks.
Okay. All right, Mangalam. Thanks very much for that. With that, it's a wrap on Power Breakfast, but we leave you with the picks of our bullseye contestants for day 4 of the week Bazaar Morning Call just after a short break.
Buy Mindtree with a stop of 1010 for targets of 1060. Buy Emphasis, buy with a stop of 970 for targets of 1030. IGL, buy with a stop of 262 for targets of 278. And Bank of India, buy with a stop of 99 for targets of 109.
My first pick today is a buy call in Havels with stop loss below 543 for target around 572. My second pick is a buy call in Kolte Patil with stop loss below 315 for target around 349. My third pick is a buy call in Hind Oil Explorations with stop below 125 for target around 141. And my last call is a buy call in Balrampur Chini with stop loss below 68 for target around 79.
My first pick is Tata Motors. I buy it with a day target of 360 and a stop loss of 330. Second, Sonata Software. I buy it with a day target of 385 and a stop loss of 355. Third, Dish TV. I sell it with a day target of 70 and a stop loss of 80. Last, IRB Infra. I carried forward from yesterday. It's a sell call with a day target of 240 and a stop loss of 270.